In a single day, January 27, 2025, NVIDIA lost $600 billion. That's more than Belgium's entire GDP, wiped out before lunch. And the entire tech sector? Over $1 trillion vaporized, the largest single-company market cap loss in US history. How? By a startup you've probably never heard of, with just 160 employees and a budget so small it's laughable. I'm AI Godfather. I make investigation documentaries exposing the dark side of artificial intelligence, the scams, the controversies, and the stories big tech doesn't want you to see. And this story? This is one of the biggest. The one that proved the trillion-dollar AI arms race was built on a lie. Here's the question nobody's asking. Was the entire AI industry based on sheer brute force spending? Or was it a carefully orchestrated narrative to keep one company on top? Let me show you exactly what I found. Silicon Valley told us a story. Better AI costs more money. Lots more. We're talking tens of billions for models like GPT-4. OpenAI spent over $100 million. NVIDIA sold the hardware, GPUs like the H100, raking in billions. It was a simple equation. More money, more compute, better AI. A closed loop of spending and dominance. But then, on January 27, 2025, a new player emerged. Hangzhou DeepSeek Artificial Intelligence Basic Technology Research Co., Limited. You probably just know them as DeepSeek. This Chinese startup, founded in July 2023, with a team of around 160 people, dropped a bombshell, DeepSeek R1, a model that matched GPT-4's performance. Their training cost? A mere $5.6 million. $5.6 million. Compared to OpenAI's $100 million plus, that's 33.8 times cheaper. And the market's reaction? Pure pandemonium. NVIDIA, the undisputed king of AI chips, saw its stock plummet 17%. $600 billion gone. Jensen Huang's net worth dropped $21 billion in one day. Alphabet, Microsoft, Broadcom, Oracle, the whole sector felt the tremors, totaling over $1 trillion lost in market cap. This wasn't just a market correction. This was a paradigm shift. And the receipts? They were undeniable. But here's where it gets insane. Marc Andreessen, one of Silicon Valley's most influential venture capitalists, called it AI's Sputnik moment. He wasn't just talking about a new technology. He was talking about a wake-up call. The moment America realized it was no longer alone, and perhaps not even leading. For years, the narrative was set. The US held the crown in AI. Companies poured billions into R&D, hardware, data centers. It was an arms race, and NVIDIA was the primary arms dealer. But DeepSeek proved that narrative was a fantasy, or worse, a deliberate deception. Their success wasn't built on throwing more money at the problem. It was built on efficiency. They used 2,000 GPUs, many of them the export-restricted H800, not the cutting-edge H100. Compare that to the tens of thousands of GPUs rumored to be used by US counterparts. Their budget? Less than $6 million. This wasn't just a cost advantage, it was a fundamental challenge to the spend-to-win philosophy. This is the part that made my jaw drop. The US itself, through export controls on advanced chips to China, inadvertently forced DeepSeek to innovate in software efficiency, rather than relying on hardware brute force. Necessity, as they say, is the mother of invention. But the real scandal? The implications for the moat these tech giants claimed to have were devastating. If AI could be built this cheaply, what was the real value of those multi-billion-dollar investments? Now, who is this mysterious DeepSeek? And how did they pull this off with such a tiny budget? Well, it turns out DeepSeek isn't just an AI research lab. It's a spin-off from a highly successful quantitative hedge fund called Highflyer, led by founder Liang Wenfeng. Liang Wenfeng, a former quant trader, built Highflyer into a powerhouse, using AI exclusively for trading since 2021. In 2025 alone, Highflyer posted a staggering 56.6% return, managing over $10 billion. Their estimated management fees? Over $700 million a year. And here's the twist. The profits from this wildly successful hedge fund are what funded DeepSeek's AI research. No venture capital needed. No desperate pitches to investors. This unique model meant they weren't beholden to the same pressures as Silicon Valley startups. They could focus on pure research and efficiency. But it also raises a crucial question. Was this an accidental market disruption, or something more calculated? Consider this. Highflyer is a hedge fund. Hedge funds profit from market movements, including short positions. Could DeepSeek's release and the subsequent market crash have been strategically timed? Were they not just building AI, but playing the market with insider knowledge? This is what they don't want you to know. The intricate connection between cutting-edge AI research and the speculative financial world. And this is the part that made my jaw drop. If this was a planned event, it wasn't just a technological coup. It was a financial one, potentially netting billions for Highflyer while wiping out trillions from their competitors. But the real bombshell, the part that sends shockwaves through the industry, is DeepSeek's licensing. DeepSeek R1, it's MIT licensed, completely open source, free for commercial use. This means anyone, anywhere, can download, use, and even modify this frontier-level AI model. China, in effect, gifted the world a state-of-the-art AI. Think about the implications. While US companies were hoarding their models, spending billions, and lobbying for protection, DeepSeek was democratizing access to powerful AI. This is a direct threat to the business models of companies like NVIDIA, whose entire existence relies on selling expensive hardware for proprietary AI development. It's also a direct challenge to OpenAI. Sam Altman, initially hinting at accusations of theft, eventually walked it back, admitting, "It's certainly an impressive model." Later, in April 2025, Altman announced OpenAI would launch its own powerful open-source model. "We were late to act," he admitted. This is the hypocrisy. They preach innovation, but they thrive on exclusivity and massive spending. DeepSeek just proved that exclusivity isn't the only path to progress. And here's what nobody is talking about. This open source release means that the very inefficiencies and high costs touted by US tech giants are now exposed for all to see. Anyone can now build on DeepSeek, further eroding the perceived moat of the incumbents. But wait, it gets worse. Of course, the official story is that DeepSeek is just a brilliant research team that got lucky. But the numbers don't add up for everyone. Some, like Scale AI CEO Alexander Wang, whisper that DeepSeek actually has access to far more GPUs than they let on, perhaps 50,000 NVIDIA H100s they can't talk about due to export controls. If true, the $5.6 million training cost narrative crumbles. It suggests a deliberate deception, a carefully crafted story to mask their true capabilities and resources. Then there's the Chinese PSYOP theory. The idea that this was a coordinated effort to destabilize Western markets, profit from short positions via Highflyer, and showcase China's technological dominance. Think about it. A hedge fund launches an AI model that crashes the market, potentially profiting immensely. It's a plot straight out of a thriller. And what about the tech itself? DeepSeek introduced innovations like GRPO, Group Relative Policy Optimization, which dramatically boosted training efficiency. Was this entirely novel, or did it build upon stolen or leaked research? Sam Altman's initial reaction, hinting at theft, before quickly backtracking, only fuels these suspicions. When confronted with a cheaper, more efficient competitor, the first instinct was accusation, not admiration. This changes everything. The narrative of US AI supremacy wasn't just challenged, it was potentially fabricated. The trillion-dollar losses weren't just a market event, they might have been an engineered outcome. And here's the part that makes my blood run cold. If a 50,000 GPU operation was disguised as a $6 million one, what other deceptions are happening in the world of AI? Let's recap the facts. DeepSeek R1, a Chinese startup with 160 employees, trained an AI model comparable to GPT-4 for just $5.6 million. On January 27, 2025, this triggered the largest single-day market cap loss in US history, with NVIDIA losing $600 billion and the tech sector over $1 trillion. This happened because DeepSeek shattered the more money equals better AI narrative, proving software efficiency, not just hardware brute force, is key. And the model? It was released under an MIT license, open source for everyone. NVIDIA's response? Jensen Huang downplayed the impact, arguing total compute demand would still grow. OpenAI's Sam Altman, after initial accusations, pivoted to embracing open source. Convenient, wasn't it? Here's what I keep coming back to. The entire AI industry, fueled by hundreds of billions in investment, was built on a foundation of perceived necessity and exorbitant costs. NVIDIA sold the dream of endless compute, and big tech bought it, convincing investors that only they had the resources to win the AI race. But DeepSeek exposed that the real innovation wasn't in spending more, but in spending smarter, and that the biggest players might have been hoarding knowledge, not just developing it. This wasn't just a market crash. This was the greatest betrayal of investor trust in the history of the AI gold rush. They sold you a bill of goods, charging you $1 trillion for a lesson that one small startup taught them for $6 million. The question isn't if AI can be built cheaper. The question is, how much did the world overpay for that illusion, and who profited most from keeping it alive? We deserve the truth.